Okay, good evening, everybody. Welcome to tonight's webinar. This is Brett Fogel from Options University, and tonight we're going to be showing you something a little different, and especially in these trying trading markets that are so volatile. This is a service that we're partnering with and bringing to you through Options Wealth Advisors or Insiders, and it's with a gentleman that I've known for some time and used to run an advisory service for us years ago, and so I know he's an excellent trader, and this is something that Ian approached me with about a year ago, 6 months to a year ago, and we've been really fine-tuning it since then, and he's been fine-tuning the process. So as all of you know, it's a very difficult market, and finding that one strategy or that one way to make money in these markets is valuable to people, and Ian's found a way that has given his readers some significant gains, and his past backtesting, which we just sent a new video out about, has shown tremendous gains. So we are always looking for ways to help our traders and students do better in the markets, and certainly with options, that's a great way to do it if you can be sure that the stock's going to rise and rise quickly within a certain time frame. So when Ian approached us with this, it felt like a perfect fit, and so with that, I'd like to introduce Ian Cooper, who is the publisher and the expert with Biotech Trader, which he's going to share with you tonight. So Ian, I'm going to turn it over to you. If you could just give a quick background on yourself, and let's get started.
Yeah, no problem. Thanks everyone for joining us tonight, and welcome to Biotech Options. Just a quick note, advisors Dawn Woods and Candace Simpson are available to answer any questions you may have during this webinar. They can be reached at 1-866-839-7034. And just to give you some background information on myself, I've been working for major investment houses now for the past 14 years. I first developed a news dissemination advisory service that kind of tracked the news dissemination process from beginning to end, and I'll introduce that as we go along. I also developed a technical product that helped me call the bottom and top of housing, the top of subprime, the death of Lehman Brothers and Bear Stearns, the collapse of the UK economy, and the collapse of the Dow to 6,500, including its recovery. So we've done pretty nicely. But over a 5-year period of time, we realized we could make even more money, even faster than before, with this new strategy that we found by following the most explosive sector in the market, and that's been biotech. But before we go on, I just wanted to give some quick notes to those that are interested in biotech options or are current readers of biotech options. I just wanted to bring these to your attention. Over the last 8 days alone, we've been seeing some exemplary gains. Our Delcath play, which I want you to take a look at after this is finished. If you take a look at Delcath, symbol DCTH, it just returned a net gain of 62% in days, playing an FDA decision that we were waiting on. We also have 3 3D printing stocks, one of which is printing actual human tissue. They're up about 90%, 60%, and 14%, with much more upside on the way. We're also looking at graphene, which we're very excited about. Graphene is running on a supply and demand imbalance and Chinese dominance. China controls about 70% of the graphite market, which is running up the price extremely high. It's like the rare earth situation where China controls 95% of rare earth, which drove rare earth stocks sky high. So we're expecting to see the same thing with graphite and graphene. But the one play that we have on graphene right now is up about 44% in 8 days. Like I said, as long as supply can't keep up with demand, graphene, which is used in biotech and is likely to be used with Alzheimer's treatment, which we'll get into a little bit later, the stock will continue to run north, and our options will just explode. So that's just an idea of what's been happening here over the last 8 days. As for the rest of the presentation, I want to show you a quick overview of how and why biotech stocks have been beating the markets for the better part of 5 years now. I want to walk you through the seismic shift that's coming for a major demographic, the baby boomers, and explain how we're looking to profit massively from that unstoppable trend. Then I want to get into some examples and explain how we can beat the smart money in individual biotech and pharma names using a timing and early news dissemination leak. There's also one thing you need to understand when it comes to trading pharma and biotech. It's not just a question of when to buy it. That's the simple part. The key to profiting, as I'll show you with our Arena Pharmaceuticals trade, is knowing exactly when to get out. And we use Bollinger Bands for that, and I'll explain that a little bit more also. Just a quick favor as we go along, as you listen to this presentation, jot down some notes, some questions, and we'll be sure to answer and address them towards the end, and I'll try to answer them the best I can. Like I said, I was seeing some of the most explosive gains in biotech and pharma based on several things. I knew that 80 million baby boomers are preparing to retire. That means biotech companies will have 10,000 new customers retiring by the day. Plus, I knew that given the right time frame, I could pull in gains from any and all biotech stocks heading into specific dates. Wall Street was also giving me screaming buy signals, and I knew that very few things in life were certainties. Aging was one of them, so why not profit from it? I just wanted to give you some of these notes in case you want to take down some of these notes as I read some of these. With our economy in a constant state of flux, there's a huge opportunity to make great money from biotech, and investors will be foolish to ignore the coming massive demographic shift of baby boomers and growth that's sending these biotech and pharma companies to the moon. The sector is even recession-proof. You can't stop people from aging, from trying to stave off death, or from visiting hospitals. Explosive gains are already being realized as revolutionary drugs are being developed, and there's still plenty of time to jump in on the wagon. Before we get into the real nitty-gritty of how to pull in simple, quick profits with specific dates that I've mentioned, let's take a quick look at some of the baby boomer trends and those screening buy signals I was telling you about. Take a look at this chart. This is a chart of the iShares NASDAQ Biotechnology IBB index, for example. It's beaten all of the major averages for years, and I've marked where we first started buying. You can see here in 2009, we got a nice dip there, and we knew that the baby boomers were going to start retiring, 10,000 a day. So we couldn't pass this up. It was just impossible to ignore. So we bought in the first quarter of 2009, and we've ridden it from that 2009 low to where it is currently up here. If you can see that, if you can see my cursor circling this area over here. So it's just been wildly explosive. Here's another chart. This is the IBB, or the Spider S&P Biotech Index. Just to let you know, health and biotech funds have also been wildly successful this year alone, rising an average of 22%. We have bought on the dip here in the IBB in early 2009 and rode it straight up again because we knew there was a coming demographic shift, and we couldn't pass up this trend. It was just too good to pass up. Now, let me show you one more here. This is the NBI, or the NASDAQ Biotech Index. Same thing happened here too. Beginning first quarter of 2009, we jumped in on that dip and rode it straight up. You just can't, it's going to continue to move up because of baby boomers, because of coming new drugs, because of graphene developments, you name it. This trend will continue at least for the next 10 to 15 years. There's really nothing that's going to stop this trend. So we've been taking advantage of it. One more thing I wanted to tell you, even medical device makers are surging. Take a look at this chart of Medtronic, symbol MDT. It just hit a new 52-week high. And this is another one that's benefiting from all the baby boomers retiring. These guys make pacemakers and heart valves, for example, and this stock is in particular is going to continue rising. If you take a look at the tail end of the chart, which I'm circling right now with the cursor, if you can see that, there's a coiled spring at the end of the chart. We believe that coiled spring is going to continue for a bit longer and then break out to the upside, we could easily see $50, $60 on this stock alone. And I'm currently doing another special report on this stock alone, which I believe could just explode for us, not only with the underlying stock, but with the option as well. Americans are living longer than ever before because of medical care and new drugs on the market. As we age, we suffer from unwanted conditions such as hypertension, diabetes, heart issues, arthritis, hearing and vision. And according to the American Heart Association, more than 1 million Americans die every year because of heart attacks. Also, according to the American Cancer Society, more than 86 million Americans will get cancer. I'm hearing that some of you couldn't see my cursor, and I do apologize for that. I'll make sure I point out specifics in further charts as we go out here. But I wanted to get into something else here after these startling stats. Baby boomers are at the tip of the iceberg, especially with knee replacement surgeries. And I can tell you for a fact that my knee is killing me, and I'll probably need a new knee as we go on. We've seen an actual 161.5% jump in knee replacements between 1991 and 2010. But there's a solution for that, and there's a very easy way to profit from that. Engineers at Cornell University, for example, are already printing out experimental knee cartilage, heart valves, and bone implants, which kind of brings us to the whole story of 3D printing technology, which I explained earlier, that's been absolutely explosive for us with 90% gains in 8 days. I'm sure you heard the story of the 83-year-old woman who had problems with her jaw. The doctors went in, they printed her out a completely new jaw with this trillion-dollar technology. And now we're hearing that this technology could print out skin, ears, bones, and organs. It used to be that 3D printing was primarily used with industrial design, aerospace, and engineering. But its applications for medicine could easily make this a trillion-dollar investment opportunity for those that get in early enough. And for us, we're already seeing these massive gains in just 8 days. Just imagine what is going to happen years from now. We have a special report, as I note here. It's called the $1 Trillion Man Report, and you'll want to check that out. That's in our special reports section. Please be sure to take a look at that. And this is more information on the 3D printing that I just went over with the doctors in the Netherlands printing out that jaw for the 83-year-old woman, and just things that I thought were important for you to know as we go forward here. You also want to take a look at plastic surgery, which is becoming recession-proof. Each year, the demand for plastic surgery continues to steadily increase, and the greatest requests for cosmetic surgery are coming from baby boomers, which represent about a quarter of the population of the U.S. As Americans live longer and continue to stay active, the increased demand for cosmetic procedures will likely continue to grow. We also are looking at an aesthetic company that should be absolutely explosive. It was recently bought out, and the company that bought them out should be, I forget offhand what the symbol is, but I'll look into that and have that in the report for you. It's a very explosive stock, and we just anticipate much further upside going forward. Something else that's very exciting for us. Let's take a look. Is 4 million Americans currently suffer from Alzheimer's, and this is where we can get into graphene investment, which is extremely exciting with Alzheimer's. Let me change the slide for you. More than 14 million Americans are expected to have Alzheimer's by 2050, and 50% of those over 85 develop Alzheimer's. This Alzheimer's risk is just one of the many reasons we're so excited about graphene. Scientists at Wayne State University already think we'll be able to combat Alzheimer's for up to 5 years. by simply inserting graphene electrodes into a human brain. And that's pretty exciting. But that's not the only reason we're excited about graphene. Not at all. With graphene, doctors and scientists are finding that they can create a new blood substitute or synthetic blood with graphene, which has been proven to be effective in restoring hemoglobin that carries oxygen to maintain blood flow and prevent clots from forming. That's exciting stuff. And if it can prevent Alzheimer's, graphene stocks are just going to continue to explode from this point going forward. Researchers also just demonstrated the first graphene-based agent to target a tumor in live mice. The hope is that a similar graphene-based material could shuttle cancer drugs to tumors or even kill tumor cells directly. Researchers at UT Dallas were able to create artificial muscle fibers that exert 100 times the force of natural muscles by only spinning graphene nanoribbons in the tight yarn. That's exciting stuff, and this could send graphene to the moon. We have about 4 plays on graphene right now. One of them is up about 40% on the option and only about 10% on the stock, but there's much further upside. You can check out that report. It's called The Miracle Medical Material of the 21st Century, Your Next Biotech Options Goldmine. Let's move forward here a little more. Now I want to take a look at the actual effect that news and the FDA has on actual biotechs. For example, if you take a look at what happened with biotech stocks that were tackling hepatitis, for example, the Centers for Disease Control and Prevention were recently calling for all baby boomers to get tested for hepatitis C. And that came about because more seniors were testing positive, or more baby boomers were testing positive for the disease. 1 in 30 baby boomers is thought to have it, and most don't realize it, unfortunately. But take a look at what's been happening to biotech stocks that are fighting for a cure. Here's a chart of Vertex, for example. You'll notice that nice little gap up right there. That was simply on news that the company was searching for a hepatitis C treatment, and they came out with great news, and the stock just gapped up simply on that news. And we see the same thing happen over and over and over again. But with this particular company, when the company released only its phase 2 clinical trials, that's when the stock jumped. Phase 2 clinical trials were on hepatitis C treatment. The data showed a 100% cure rate for patients treated with a particular drug over a period of 12 weeks. That meant that a drug stopped the virus from spreading and from causing any more damage to organs like the liver. And again, we see this happen over and over again with news. Move up a little bit here. You know, bottom line here is what I just showed you is just a small glimpse of what's happening in the biotech and pharma community. Baby boomers are going to send a lot of these stocks much further north, and we're in for the ride. I've been in these stocks since the early 2009, and I really see no real reason for the trend to retract and come down. This trend will remain intact. There's a huge bull market here in biotech and pharma, and I just see absolutely no reason for it to come back down. You know, Forbes just came out and reported that the global market for pharmaceuticals could soar from 950 billion currently to more than 1.2 trillion by 2016. Also, we've beaten a lot of the smart money in this space. If you take a look at this 4th bullet point, companies like Fidelity, Goldman Sachs, BlackRock, Vanguard, and dozens more recently increased their holdings in biotech by more than $4 billion. This is an industry they should have been in as early as 2009 on the dip in 2009 when we got in. That's when the smart money should have been buying. I want to move on here. I want to show you a chart of exactly how our system works. What I just showed you was the long-term trend that we're going to profit from. Now I wanted to expose you to the lightning fast trades that just returned 125% in 8 days on the put option side of Delcath Systems. Again, check that out when we're finished. It's symbol DCTH. And the best place to take a look at that is bigcharts.com. That's one of my favorite sites to use when taking a look at biotechs and timing everything out. But let's move forward here. The FDA, as the slide says, is literally handing you a check every single month. And that's because we're getting you in at the right time in the right place. And there's windfall profits to be had. But you have to remember this. It's not just knowing when to get in. That's the easy part. You have to know when exactly to get out of the position, which is a little tougher. And it's why we use Bollinger Bands, which I'll show you in this next chart. Take a look at Arena Pharmaceuticals. The blue lines represent every time we bought the stock, and the red lines show you every time we exited the stock and the options. You see, we knew that Arena Pharmaceuticals' obesity drug called lorcaserin would be up for possible FDA approval on June 27th. We also knew that if the FDA approved the drug, it'd be the first new weight loss drug to reach the market in years. We also knew we had to beat the smart money to the punch. So we bought in around March, where that first blue line on the chart is. That's where we first started buying stock and options on this, because we knew there was going to be a huge explosive move in this stock. And that's because the price of a biotech company will go wild as the date in question draws near. It happens around 90% of the time. The same exact thing happens. As an FDA date, phase 3 or phase 2 result date, PDUFA or Prescription Drug User Fee Act, or a conference like ASCO draws near, investors will bid up the price in spectacular fashion. You can literally set your clock to it. You see, with Arena Pharmaceuticals here, we knew the smart money was about to race in and drive that stock to the moon. So we began by buying the underlying stock at $1.80, where that first blue line is, along with the July 2012 150 calls. 5 days later, we were out of the stock for 68% gains, and half of the 150 calls for 68% gains. The very next day, we exited the second half of the calls for 118% gains. And here's why. First, the gains were just too good, and second, the chart told us to. If you look at the first red line here, those the red lines that surround the stock, those are our Bollinger Bands. We set it using the 20-day moving average. It's 2 standard deviations above and below the 20-day moving average is what we use. A lot of times you can use that. You can find that in bigcharts.com, for example. Towards the tail end of March, where we first bought, the stock began to pop above that upper Bollinger Band. We also got a big spike in the directional movement indicator, which we knew was unsustainable because spikes in DMI and MACD, which is the moving average convergence divergence indicator, if the spikes are too high or too low, we're going to get an immediate snapback. This initial move above the upper Bollinger Band was our sell point. That meant that the crowd got much too bullish, much too quickly, and we knew there was going to be a pullback, which we got. As you can see, following that rise above the upper Bollinger Band, we got a pullback. Then on May 8th, the second blue line right here, we bought in again. We bought the June 250 calls at $1.25 and then exited that in 2 days for 212% gains. Again, we got a pop above the upper Bollinger Band. We may have sold a bit too early, but you can't really walk away from a 212% gain. It was just too good. and we didn't know if we were going to get a snapback. We didn't really want to risk our gains of 212% in case of a snapback. We just weren't in a position to risk readers' money. Now, with less than a month to go before the June 27th FDA date, we bought the July 6 calls at $1.50 on May 31st, which is this third blue line here, because the momentum crowd was just chasing this much, much higher. We would exit half in 9 days for 57%. We would exit the second half 4 days after that for another 167% gains. Again, we exited above the upper Bollinger Band, which we eventually got. That pulled back nicely. We weren't in a position to risk reader gains. I would never do that. We want to play it safe and do whatever we can to hold on to gains as long as we can. Now, any normal investor would just pack it up and go home after those gains. But I knew there were more gains to be had as we went into the position. So I had readers set up a well-placed straddled hedge with a put and call using the same strike price. So on June 18th, we bought the July 8 calls at 245. We would exit 2 days later above the upper Bollinger Band as the momentum crowd pushed the stock even higher for another 84% gains. Then a couple days after that, we took another 22% gain. The money just kept piling in, so we just kept taking our money and walking away. At the same time, we were also hedged with a put. We had the July 8 puts in our back pocket in case of sudden reversal above that upper Bollinger Band, which we did get. We would walk away with a 46% gain inside 6 days on half of the put, but then we waited too long and we got another quick pop, and we would exit the second half at a 46% loss. So we broke even on the put, but overall we did amazingly well with Arena Pharmaceuticals. Now, Arena, like I said, had an obesity drug called lorcaserin, which was coming up for FDA approval. Now, usually when this happens, you'll also take a look at competitors that also have obesity drugs in the pipeline and are awaiting their own FDA decisions. So let's take a look at one of the competitors here. This is Vivus. We bought Vivus September 24 calls on May 31st, shortly after that gap up. That gapped up on news, but we were still able to milk this for a bit more gains. We bought those calls at 590 and took 26% and 32% gains in just a couple of weeks. As I said, Vivus also had an obesity drug in the pipeline. They were also waiting on FDA approval. Arena's news just forced this stock much higher, making that anticipation level and the momentum crowd want to buy everything and anything associated with obesity drugs. And Vivus just happened to be one of those. Let me show you another one here. This is Orexogen. This was a fun trade. They also gapped up in March, and we were able to get in around here at the $4 level and rode it and just held this long term because they had an obesity drug too. So we held this above 7. We bought the underlying stock. I'm not sure why we didn't buy the option, but we played this safe, and we took close to a double on this. Let me show you another example here. This is Dendreon. This is a personal favorite. This one jumped up simply pre-trading anticipation of phase 3 results. This is a 2009 chart. That's when my readers at the time took 300% gains in less than a month with call options. Dendreon had a drug called Provenge, which is a prostate cancer drug that uses the body's own immune system to fight off cancer. Funny thing about this stock is that at the same time we were recommending a buy on this, Jim Cramer was out telling readers to sell. And he told readers, and I quote, "This is one where I got in trouble. I do not like Dendreon. I think it is up too much on a spike. Sell, sell, sell." Meanwhile, we were buying because we knew those phase 3 results were coming out, and we couldn't pass this up. It was just too good to be true. But as we soon learned, he was dead wrong. This stock would run up from about $5 to more than $22.50 in less than a month, simply pre-trading phase 3 results. The arrow in the chart shows we got into calls with the underlying at 5, and it just gapped up one morning on that those phase 3 results, and my readers took 300% and just took it to the bank. It would eventually run up a bit more because the momentum crowd chased it as high as 27.50, but we got out. You know, you can't pass up a 300% return, especially outside that upper Bollinger Band. You know, you can't walk away from that kind of gain. And then on April 14th, we closed half of Dendreon for more gains of 338% on news that its cancer drug Provenge actually met the main goals of the phase 3 study, and on news that it would seek U.S. approval in the fourth quarter. Sometimes we'll do that. We will play the run-up, and then sometimes we'll either hedge, or if we have some kind of inclination or the technicals tell us otherwise, we'll hold it for a bit longer and try to milk a bit more gains out of this. So we were able to walk away with 300% and 338% gains on this in less than a month. This was one of the most explosive trades I've had in my record, and I've been trading for 14 years, and this is one of my favorite story stocks to talk about. And we can simply do this same thing. The same thing that happened to Dendreon and Arena Pharmaceuticals and Vivus and Orexogen. We can repeat that over and over and over again, just having news of a possible decision or conference or what have you 2 to 3 months in advance. And we simply do that, again, leaving ourselves plenty of time to trade those biotech decisions. And those decisions include FDA announcements, advisory panels, which are always fun to trade, phase 3 trial information, including phase 2, PDUFA dates, which are very easy to trade. I have dozens of these that I'm watching right now that I'm about to issue buys on very shortly. And you also want to trade conferences, such as the ASCO Cancer Conference that we've been profiting from since 2009. A lot of times you can get pre-conference information from the companies on exactly what they'll be presenting, and you can have a really good idea if they're excited or not, and you can really chase with their momentum crowd and make some great money. We've done this countless times. Again, you want to invest 2 to 3 months in advance at best. You never, ever get greedy with returns. Again, it's not always about being in the right place at the right time. That is the simple part. I can do that in my sleep. It's knowing exactly when to get out that is key. And you always want to have Bollinger Bands in place. You also want to have in place MACD and DMI, you know, you want to watch for any unsustainable spikes in either direction. You can even use Williams percentage range to see how oversold or overbought a position is. It really is about getting in before the momentum crowd has any idea about what's going on. But you need to watch those technicals to know exactly when to get out. You never want to cheat yourself. You never want to risk more than you have to risk. Let's take a look. This is a chart of Regeneron. This is symbol REGN. This company was up for FDA advisory panel review on May 8th and was up for an FDA approval decision on July 30th. If we had actually bought in, which we did not, we would have played this as far back as February 2012, which would have meant we would have gotten in around that blue line, around $75 a share. And then we had the ability to exit the position just months later at $135 a share. The options went nuts on this, and we could have milked this for, you know, all it was good for. This came up during some back testing, but I just wanted to show you the strength of trading decisions well ahead of time. Let's take a look at another one here. This is Gilead. This is another personal favorite. This company has a drug called Quad for HIV, and it was up for a May 11th advisory panel review and an FDA decision date on August 27th. If we had played this one, we would have bought in around that blue line around late February 2012 on that gap down. We could have bought in just under 45 and rode this up close to $60 a share. Again, this is another one where the call options went absolutely ballistic. That red line was just before the advisory panel, I'm sorry, the actual FDA decision date. So we would have gotten out with massive gains. We would have played that safe. Here's another one. Here we go. This is a company called Ironwood Pharmaceuticals, symbol IRWD. It was up for an FDA approval date on September 8th for treatment of chronic idiopathic constipation and irritable bowel syndrome. Take a look at this one. We could have gotten in at 12 and rode this as high as about $15 a share, and we could have milked those call options for everything, and we probably would have hedged our bet with a straddled call and put at the top as the decision date actually drew closer and closer, because whatever would have happened, one side would have outperformed the other, and we would have walked away with some very solid gains. We've done that over and over again. For example, with Dendreon, for example, another one being Arena Pharmaceuticals, and we can do that again and again and again. But here's something I really want you to see. These are some back testing results that I did since March 2012. I just did this over the last 2 weeks just to look back and see how explosive most of the biotech stocks and big pharmaceutical stocks would have been. Take a look at this. Not one of these plays had a single loser. They were all up. And the initial date that you see in the second column over, those are the dates that we would have bought. Those were 3 months in advance of actual decision dates. There wouldn't have been a single loser. We played PDUFA dates and FDA decision dates with these back testing results. And these were just underlying stock moves. These were not moves in the options. The options moves would have been, you'd never have to work again since March. I mean, take a look at these underlying stock returns. They're all over the map. They're between 5% and 550% since March. Let me show you one more here. This is a stock called Peregrine Pharmaceuticals, and this is another favorite one. We could have bought this one at 50. I don't believe there were call options available in this one, but we could have bought in around 50 cents a share and rode it close to $6 a share, which was an explosive return. Unfortunately, on September 24th, disaster actually hit this stock after investors learned that the company's lung cancer drug was deemed unreliable. Smart investors would have already been in and out of the trade, though. You see, once a decision date or announcement date comes and goes, the near-term catalyst is gone. Volatility actually decreases, and the reasons to own the options or the underlying stock diminishes. The stock would rocket about 2 weeks. I'm sorry, the stock rocketed about 2 weeks ago on great lung cancer news from the company. We didn't know it was going to be deemed unreliable. If we had traded the stock, we could have bought in around June, which was 3 months before the decision, maybe even at the end of May 2012, and the results were just astounding. And I oftentimes get the question, is there a downfall of trading FDA decisions? And there is, but again, it's all about knowing when to get in and knowing especially when to get out of a position before everything hits the fan. Sometimes and it's rare, decisions come out sooner than expected, which can halt the stock. These are usually unexpected and can kill a stock in a heartbeat, but we're usually in and out of a position well before that can even happen, simply by watching Bollinger Bands and the momentum crowd. But those kind of things just happen, you move on. Other than that, that's all I have right now. We do have new positions being sent out shortly. I do want you to take a look at Delcath Systems when we're finished, symbol DCTH. You can see the pre-run up on expected news, but you can also see on the other side of the trade, as soon as that news hit, that stock sold off massively, and we were able to milk 125% gains on the put side of that position. I'm going to turn this back over to Brett if he has anything else to add. If you have any questions or comments that I can help with, please always let me know. I'm always reachable. I'm not one of those people that you can never reach or find. I will make myself available to all of you at any time. Just email with questions and I'll get back as quickly and as possible. Thank you very much for listening, and I will see you all very soon.
Okay, well, thank you, Ian. And Ian's very excited about this service, as you can tell, and for good reason. We wanted to bring this to you as soon as we could because it really offers a lot of opportunity in this this economy and volatile markets. This is recession-proof. It's not going to be as volatile and subject to earnings or disappointments. Ian has really fine-tuned this process, so you're getting his seasoned judgment and a lot of his research that goes into each one of these picks. And so as you can see, he's had quite a strong track record with that. And there's no guarantees with any trading. We all know that, but Ian's proven that he's got his finger on the pulse with this. And so we've had a lot of interest in this service, and that's for good reason. So we encourage you to take a look at this. We're going to take some Q&A here shortly, so stick around, and we'll take a look at that. But what I wanted to maybe do is share my screen and show you the actual service, that what happens when you sign up for this. So I'm going to go ahead and do a screen share, and then we'll tell you how you can find out more about the service. So if you do have any questions, though, we have a phone number posted that you can call and have your questions answered by calling that. And Dawn, if you wanted to post that again, let's go ahead and put that up. I'm going to load my projector and just give you an idea what it looks like once you log in or once you join the service. But again, we've had a lot of interest in this. Ian's on a hot streak here with what he's already put out, and had some strong movement in these picks that he's already put out for everybody. So if you do have any questions, go ahead and post that in the chat, and Ian, feel free to chime in and answer those while I load this up. But I wanted to give everybody an idea what this looks like. So just bear with me here, and I'll load that. Or Ian, actually, if you have your projector loaded, it might be useful to log in and just give them a tour. I'm having some trouble loading this projector on my end. So, but folks,
I do see one question here.
If you don't have. Okay, yeah, just chime in. Go ahead and answer any questions that you'd like.
It says, where do you get the information as to when the FDA will release their information? I get this from many sources. You can get it directly from the FDA site itself, which I believe is fda.gov. But I also follow several blogs, and I also have membership in one of those super expensive services that cost like between $5,000 and $7,500 a year that has a calendar of specific PDUFA phase 2 and phase 3 trials, and things such as that. You definitely want to follow conferences such as ASCO, which is a great cancer symposium that we follow every year and profit from very easily year after year. You can also go into, say, Google or Yahoo news search, and type in PDUFA dates or upcoming phase 2 or phase 3 trials or upcoming FDA decisions. So I really look at a bunch of different places, including blog calendars, which are nice. What I'm also doing is I'm putting together a list of some other great sources that we do use in a special report on the site shortly. I'm just in the process of compiling all of that information together so I can get that to you in a more organized fashion. So I hope that helps. Again, like I said, if you guys and ladies ever have any questions, any concerns, any comments, any stocks that you want me to take a look at is in the biotech or pharmaceutical arena, just send it to me and I'll get back to you, as soon as possible. I will not ignore any emails, any comments, or anything. This is your service. I want to make sure you're happy. I want to make sure you're making money.
Okay, great. And folks, I'm having some trouble loading the projector. I was going to walk you through what the service looks like, but we can give you a sort of a description of that. You get access to a membership site that has the alerts, which do go out by email. So whenever Ian comes out with a new pick, we're sending that out to you right away for a trade alert. Those are all archived in the members section, which is this page here. We'll try to post that here shortly. And you also get the, he has video updates that he puts out. So he's done several video updates that he's put out, so you have a visual on what he's trying to put out every time he has a new option pick for a biotech. And then there's the 3 bonus reports that we told you about, and those you can see on the link that we posted right there. So again, if you have any questions, this is going to be a strong service. It's already kicking off to a good start, and we'd love to have you join us. We're not trying to over promote this. We believe in the service, we believe in Ian, and we know that a lot of you are struggling in the markets right now, and so we felt this was a very timely promotion, and that could help a lot of people get their accounts back to where they were, and long term it's a great service. We plan on working with Ian for quite some time on this, and certainly biotech and FDA announcements are never going to end. This is something that will just get better and better, and with advances like graphene coming that will apply to semiconductors, to Alzheimer's, putting graphene chips into people's brains, and they're even planning on using it to build a hotel or a space elevator, rather, to take people up out into space and eventually hotels in space. So it's a remarkable time that we live in, and much of these advances that will change our lives are going to come from the biotech arena, and some of the advances that are just imminent and coming out all the time, both from drugs and various advances that these companies like Ian mentioned are coming out with. So there are quarterly and biannual subscriptions. We suggest that you give that at least 3 months to fully evaluate that. There is a 30-day guarantee on that, so if at any point during the first 30 days you don't feel it's for you, you can contact us and get your money back. So nothing to lose. We encourage you to try that. It's a great service. And if you have any questions at all, please just post those for Ian in the chat below. He'll stick around for as long as it takes. And again, that link here that's been posted, you can get all the information that you need for the service. So Ian, did you have anything else to add?
I actually do.
While people are thinking of a question.
The really nice thing about biotechs and pharma, especially with specific dates in mind, these trades are never reliant on the overall market. It's almost as if they're trading all by themselves, which is really nice. And you can beat the market with these trades. As I showed you with some of those charts earlier, the XBI and the IBB, those have all just taken off despite, dips and blips in the market. And I am looking to issue a new buy alert by this Friday. We're also reiterating a buy on our very successful graphene play, which I believe is just going to be super explosive going forward. And we should have a new FDA, maybe a new PDUFA or phase 3 trial trade as soon as this Friday. And Brett, did you have anything else?
No, folks, if you don't have any questions, then we can go ahead and wrap it up. You know, we wanted to give you a first-hand look at what the service is. We've had a lot of questions asking about it, and hopefully that answers your questions in terms of the kinds of plays that Ian is finding. And as you can tell, he's very passionate about this, and he spends all of his time looking at these biotechs. And so there are gems out there. He's all day long looking for them and putting them out to the subscribers. So we feel this is an excellent place to watch and to also spend your time and to test out some biotech trades and test out your option skills that we teach you here at Options University. But we keep the plays simple. Ian's putting out calls and puts, vertical spreads, and very simple strategies. So if you're new with options, he spells out exactly what it takes and what trades to put on and the strikes. So we encourage you to take a look at the service. And at the end, after you leave the room, you'll have a chance to watch this video again and also how to enroll. So, and those 3 free reports are very interesting. And in one of them, he's already has seen some great gains in the stocks that he recommended in one of those reports. So again, folks, please take a look, join us. I would love to have you. We're going to close this out enrollment here probably by the end of the week so we can regroup and work with the students that have joined us and then reopen it again a little bit later. So thank you, everybody. If there aren't any more questions, then we'll let you go. Have a great night. And the presidential debate is coming up at 9, so we appreciate that you took the time to join us and listen in. So thank you, folks. Have a great night, and we'll look forward to seeing you in the Biotech Options Service.